Simon, you're live.
Hey, financial freedom seekers. It's been a long time since I've done a live, and it feels like the whole world has changed. The last month has felt like 3 years to me. So hopefully, if you could say in the live chat that you're hearing me okay, the guys will let me know. We got Azad here who is going to make sure everything's okay. And we've also got Brandon in the live chat checking and making sure everything's good. So they'll interrupt me if there's something up. This is my 6th emergency broadcast. And I've done a lot of broadcasts, and I only do emergency broadcasts. I don't take that one lightly. And the reason that I'm doing an emergency broadcast is because I do believe in the crypto market. We are in our Lehman Brothers of crypto moment. I've uploaded a few videos to YouTube with interviews that I've done recently. I've been very active on Twitter. This was meant to be my time out. I'll give a bit more details on that, but I want to do 3 things for everybody today. My goal is to make this fairly upbeat. There's been a lot of shit going on in the industry. There's a lot of negativity, my moments, but I want to really just focus on what's happening right now, what we can do, and some various other things, and also look at some of the future things, because it's very easy in these moments. I've been through lots of cycles in crypto. I've been a shareholder in Kraken when the first major cycle happened, when 850,000 Bitcoins went missing from Mt. Gox, which was approximately 70% of the Bitcoin trading market. I also was a part of the second cycle when we did a recovery plan just like this for Bitfinex. And later I'll be going on Twitter Spaces for anybody that wants to dig deeper into any of these things or ask any questions. Also, beware, I got a bit of a cough, so I've got a lozenge. I'm going to try and drink lots of water, but I may mute myself if I have a coughing fit, in which case we can look at some of the questions and some screenshots. Okay, but I'm going to keep going until my voice collapses. I've been doing a lot of interviews recently. Okay, so what are we going to do? 3 different updates today. First one is Bitcoin and crypto markets, which is the main topic, the Lehman Brothers of crypto. So if you're not familiar with my emergency broadcast, I created a membership site called retirementplanb.com/book. That's where you can get a free copy of the first published book in the world to include Bitcoin over a decade ago, where I forecasted many of the trends that we're experiencing today, and the Great Depression of the 2020s, central bank digital currencies, modern monetary theory, many of the things that are discussed today. And I was in the midst of writing my 3rd book, which I'm 200,000 words in, and unfortunately, life tragedy caught up with me. I'll cover a bit of that because I'm going to be making this video a tribute to my late father. So I'll go a little bit deeper into that and how it relates. We're going to be discussing that. So the Bitcoin, the Lehman Brothers moment. But I also want to tie that into a future, because the 3rd cycle that we've experienced, I'll share some of my screens. I gave an internal presentation recently where I talked about that I was expecting a yield and DeFi crackdown. When Bitcoin was approximately 65,000, I went on to try and warn people that there could be a correction to 20,000. People thought I was crazy. It was on a rampage then. But I've been through these cycles. So, it's just reassurance that no matter how bad it seems in the markets, we always end up recovering. And I personally, not financial advice, don't see this as any different. But we have to learn to be a better investor and learn from this experience. And that's what we're going to be covering on today, focusing on what to learn and what to do differently. The second thing I want to do is look at some of the major trends that can come from this and the major opportunities. I'm sharing some work that we were working on that I'm going to be sharing today, because this was our plan for the next 2 years around Bitcoin investment banking, and some of the trends that are happening in the Latin American region. Because of this situation, when there is disaster, we tend to put things forward and achieve things in an incredibly small period of time because of urgency, and things move forward. So I'm going to share a little bit about that, some of the future things that we'd like to be working on, as well as tie that into some of the trends and restructuring deals that we're working on. The third part of that is keeping an eye on the big geopolitical picture right now. So as I'm writing my book, it's actually it was broken up into three sections. The first is on wealth psychology and the different types of monetary systems and how it impacts wealth psychology. The second is on wealth cycles. So looking at the big macro cycles, I follow the money for 5,000 years, time preference cycles, micro cycles, and also breaking down some of the Bitcoin cycles that we're talking about. And before it was published, obviously we had this cycle, so there's a lot to learn from there as well. So I want to make sure that we're keeping an eye, excuse me, let me do a quick mute while I cough my.
Simon, we can't hear you. Hello, Simon, we can't hear you. You're still on mute. You're still on mute.
How's that?
Better.
Okay, awesome. Okay, so then looking at some of the big geopolitical, when I did my previous emergency broadcast, I was talking about IMF, Bretton Woods 2. I did a broadcast on the El Salvador Bitcoin volcano bond, the US executive orders, what that means, and also the Ukrainian war, World War III, and some of the big trends in the geopolitical. Trying to get my voice to carry on. So I got the lodgings going, and excuse me. So I want to make sure that we're looking at some of the things that are happening in UK politics, because it actually has big impacts on the future of Bitcoin, central bank digital currencies, and some interesting things that are happening right there. So before we jump into the main topic, I'm going to be doing a Twitter space in approximately, let me look, about 45 minutes from now, where you can come in, you can ask me questions, mainly focused at the Celsius community. They want to ask me anything based upon that. This is going to be a more bigger macro picture for the people that may not have been following along. And there's the Twitter space, so we'll schedule that and you can join in there. We've also got a Slido board where you can ask some questions, you can upvote other people's questions. Azad, how do they gain access to the Slido board?
If you head over to slido.com and enter the code #emergency6.
Okay, awesome. So you can upvote other people's questions there, and I'll go for as long as my voice will handle, but I'm gonna need those little cough breaks because I've been just doing too much, burning the midnight hour, not getting much rest. Okay, so I'd like to make this in honor of my father. The reason I haven't been broadcasting much on YouTube recently is because sadly my father passed away. So this is going to be a tribute to him. I'd like to just share a little bit about why that's important and how that connects to everything right now. I do believe that life is about connecting the dots, and in the book I've been talking about how, you know, following the money for 5,000 years and you start to really understand some of the trends today. My father was born in 1933 and he sadly passed in 2022. It was a deeply emotional moment for me, and I've written a few notes here as well on these different things to make sure I stay on track, because I often don't do that. But he was born in the Great Depression, and so he experienced what it's like to be born in the Great Depression. He then went through World War II, you know, living in poverty where you were literally, him and his, 5 brothers and 1 sister were hiding under a table while the world was bombing around him. So, you know, that type of thing does have effect on your wealth psychology, and, some of the things that I've been talking about in my book as well. My father had a very, very, great life. After going through that, he did become a self-made millionaire, which I admired very much. I really enjoyed his stories. He lived a very full life. But in 2000, he took everything that he had ever made and he put it in the stock market. When the dot-com boom and bust and we had a disaster situation like this, my father lost everything he'd worked his whole life for. It was a deeply traumatic period. I do remember the stress of that. But I do believe that there is a silver lining in every time like this. I know that I've been getting thousands of messages from people that put their life savings in Celsius. It really did take me the emotions of experience that, because my father and myself were deeply connected through that subject. The reason for that is because I vowed to my father back then that I would figure out where his money went. And that led me on a new path in life for the last 2 decades. That path was I went to study economics and do a master's in economics, worked in investment banking and trading and corporate finance. And left in 2006, where I wrote my first book to support students and graduates who are working in banking to understand the complexities of the financial system and the Ponzi scheme that we call fiat currency. And that was really the study to try and figure that out, dedicating myself to investing. I do remember that I got myself really deep in debt because my wife and myself, we were trying to create a bank because we were fed up with speaking with politicians. Now, at the end of this video, we'll go full circle because the UK political scene right now is very interesting. It's going full circle from where we started, connecting the dots. But we were trying to create a bank, and that was the company BnkToTheFuture that we started in 2010. 2009, we came up with the idea, around the same time as Bitcoin. I wanted to do what I talked about in my book, BnkToTheFuture, Protect Your Future Before Governments Go Bust, that Bitcoin later created, which is the ability for people to have a bank where they could own their own money, spend their own money, and it doesn't rehypothecate based upon debt. It turned out that that wasn't possible. And so we needed to put $60 million in the Bank of England just to start the conversation. I was told that I needed to step down as an executive because it had to be someone with experience in being an executive at a traditional bank. And they told me we could only build the technology on top of the existing infrastructure, which means that even if we put funds in there, it would be rehypothecated by another bank. So it was impossible to create. That wiped through all of my savings. We were completely in debt, had a mortgage, £150,000 in debt, and massive financial anxiety trying to get through that. But my father actually lent me. He, even though he was, 30, he was very, anti-debt. He did actually lend me the money in order to try and get through that stage. And with that loan, we decided to pivot the business to a securities business, which really brings into many of the things here today. So that startup capital was actually a loan from my father when I was deep in debt. I took some of that and I invested in Bitcoin at $3 because we were so pissed off with trying to create a bank that we went to the first Bitcoin conference in the world. That Bitcoin that went from $3 over some of the cycles to $300 was a tiny portion of that was used to pay off my father's mortgage. And so we were connected through this subject as well. So I want to honor my father and really tribute this emergency broadcast to him because it's what's giving me the inspiration right now. I was meant to be in the morning process, but instead I had to come out because I got so many messages from people that were considering committing suicide because they couldn't handle telling their spouse that they've lost all their money. And so I share that story because at the end of the day, we weren't talking about money when my father passed. We were talking about love. And I've been sharing this story a few times, but I want to honor, because this is my own channel, I wanted to do that tribute and honor to my father and let him know that his spirit lives on inside me, and I will continue to use that in order to support as many people trying to get out of difficult financial situations. Because I do hold a belief, and if you've watched any of my videos, I know some of you are new to me, that I've always end my videos with the belief that we are alive at one of the most interesting and exciting times in financial history. The problem with that is that some people are going to get really hurt on the wrong side of hyperinflation, on the wrong side of leaving your money in an institution that didn't turn out to be all you thought it would be. All sorts of things, wars, pandemics, And over a decade ago, I released a video called The Great Depression of the 2020s on this same YouTube video channel you're seeing here. I was trying to prepare people for this. And in 2000, I created a 4-part video series, which is at retirementplanb.com. It's also in that membership site, retirementplanb.com/book. You can get all the previous broadcasts for free, emergency broadcasts, a completely free copy of my book that I wrote, the first published book in Bitcoin, and a 4-part video series on how to invest in the Great Depression of the 2020s and how I'm investing. That actually led to a small percentage of my wealth being invested for a compounded interest effect. And this is where it ties into the Lehman Brothers of Bitcoin story that I'm going to be sharing here today, and some of the future trends as well that I see coming from that. So let me recompose myself. Repaid him, got some notes there. And so tying that all together, I wanted to do this video here because I may not be able to broadcast after this due to some non-disclosure agreements that I may have to sign in order to work on solutions to what I believe this Lehman Brothers of crypto moment is. And so let's jump straight into that story. So on that video, on that 4-part video series, I had a small percentage of my wealth for compounded interest. The way that I invest is I am a risk manager. I've been dollar cost averaging into Bitcoin since 2011. As I said, I started deep in debt. I repaid some of that mortgage for my father, and I ended up achieving financial freedom that I could never imagine possible. Full disclosure, what I'm going to go through right now cannot be treated as financial advice or legal advice. I'm going to give you an update on what I think the current situation is and some of the things that I'm working on to support the industry moving forward. The companies that I'm discussing, one of them will be Celsius. I am a shareholder in Celsius. The company that I co-founded, BnkToTheFuture.com, is shareholders in over 100 different companies in the industry, whether it be investing in multi-billion-dollar unicorns early, like Bitfinex, Kraken, Bitstamp, Blockchain.com, Circle, Coinbase, Robinhood, Bitso, Shapeshift, many others. So many different companies in the industry that's given me this experience that I share with today. The story really begins in this Lehman Brothers moment when I released that video series, that was because a small percentage, so full disclosures, I was a shareholder in Celsius. I'll share how I became a shareholder in Celsius. And I had a deposit that prior to the crash was worth multiple tens of millions, approximately $50 million, and now is, depending on last time I look, approximately tens of millions anyway. So I am in the same boat as the other depositors. Because I was mourning, I didn't move those funds. And even if I did, I wouldn't be able to do that anyway, because I'm in a position where I would need to disclose that, because as a director of a regulated company, we have all sorts of processes within our organization, like conflicts of interest policies and various other things, where you have to hold yourself to a high ethical standard. You have to follow certain processes that prevent me doing many of the things that people have been accusing me of since I went public, trying to support the industry getting out of this Lehman Brothers of Bitcoin moment. And by the way, I completely respect anybody. The mantra of Bitcoin is don't trust, verify. So I've been trying to answer as many questions, and I did lots and lots of AMAs, and I'll continue to do that after this. Because there's money on the line here. Some of you may have known me for years, others may be new to me. So you deserve to have that skepticism and get those questions answered, because it's what got us in this place in the first place, is other people's actions. So trust has been broken. And I hope that I can go through that process to try and give a compelling future so that we can be a bit more positive in this emotional roller coaster that we've been experiencing. So, okay, let me go through the timeline of the Lehman Brothers of Bitcoin moment. So I invested in the 2000, very, very early, before the ICO boom and bust, in the first lending company. That essentially was the lending, the Bitcoin lending industry was innovated by a company called Bitfinex, which later became important as well in developing the experience of how to use free market solutions to support companies in distress situations. And they created this transparent peer-to-peer order book where you could take your Bitcoin, you could lend it to somebody that wanted to short Bitcoin on the market, for example, and it was all matched up on an order book, and you would receive some yield in return for that. You could do it with Tether, the stable coin, as well, through this order book. The first company I won't mention at the moment because there's certain NDAs that I don't want to mention that. Because they're going to become important, I believe, in restructuring proposals moving forward. But they actually invented the market. And then a couple of other players came along and implemented a lot more louder marketing. And Celsius came along and separated the market. Really, it was a user experience that was put on top after acquiring a company that I invested in, that BnkToTheFuture invested in, called BSave. Now, BSave actually ended up with an issue because the way that they were generating yield was through Bitfinex order matching, and they put a nice user experience on top of it. But because they put a user experience on top of it, some people really didn't know how that yield and that return was being generated. That kind of comes full circle to where we are right now. So it was, pitched as a savings account. And as long as there was a peer-to-peer model, then you just need to make sure that there's a fair representation of that, because people see a savings account and they think certain things. So how things are represented and disclosures is one of the reasons that we're in this mess today, because they haven't been made effectively. Celsius later came along, when I started to look at this, I wanted to have a way to pull out some of my wealth without having to sell any of my Bitcoin, because I don't like selling Bitcoin. And I put together a whole financial plan around how to do that. I also wanted to take a small percentage of my wealth and generate yield on it, knowing that, because I studied the market hard, that as soon as I relinquish the private key to that Bitcoin, it's no longer Bitcoin, it's an investment product. And so therefore, I was analyzing the risks in terms of what that would be like, and determined that is not something I would do with a large percentage of my Bitcoin. However, there's a percentage of my Bitcoin that I'm willing to speculate in order to achieve and protect from different outcomes. As I said, I'm a risk manager. If you look at that free video series, retirementplanb.com/book, I disclosed how I invest to protect from inflation, deflation, economic growth, pandemics, Bitcoin failure, Bitcoin success, gold standards, Bitcoin standards, all outcomes, monetary renegotiations, and many of the things that I've been forecasting over the years and through these emergency broadcasts. Okay. So I found a company that I wanted to invest in. So I got on a plane to New York, and I went to the offices of BlockFi. And I met Zach, the founder, who, while I was there, he contacted Peter McCormack, who was doing some promotional work on his Bitcoin, What Bitcoin Did podcast. We agreed that we were going to allow the BlockFi community to invest in BlockFi. The problem was that the VCs decided to block that deal. And at the same time, I went down to see the other companies. And I sat down and I met Alex Maszynski from Celsius. And, he shared many of the things that I've been talking about over the years. It seemed like we were aligned in terms of our vision, in terms of, banking. And so I got very excited about the concept of a peer-to-peer Bitcoin, system that was looking like it was starting to get traction to allow Bitcoiners to pull out some of their Bitcoin without selling it and receive a loan, and others to generate an effect if they want to pay some yield for that. And as long as it is a peer-to-peer model, because I was involved, one of the people that I met way before Bitcoin I was involved in the peer-to-peer lending market and also lobbying regulators to allow for the investment of securities online. I was a founding member and director of the UK Digital Currency Association when I lived in the UK and the UK Crowdfunding Association. And we managed to get the first laws that allow people to invest in securities online. That work that we did was picked up by President Obama in 2012 and led to the Jobs Act that started opening up financial markets, that led to the possibilities of later what became securities tokens. And so the securities market and funding online is a market that I know incredibly well, more than anyone else I know, because I've been involved in creating it from the beginning. Okay. So we ended up, because the VCs blocked, and if you look at the valuations of what happened in the recent Lehman Brothers of Bitcoin moment, then BlockFi actually ended up getting, the equity ended up significantly getting wiped out. So the VCs ended up getting wiped out there. We dodged a bullet, essentially. But we also did the Series A funding round for Celsius. And so this really is where it started. We started to work on, in partnership with Celsius, because we became shareholders, a securities law compliant version, because we took the opinion that these will be securities in the future. I'll share with some of the trends and some of the charts that I released in terms of different trends that were coming out. So that was our opinion. We did the Series A funding round under that model. And over time, the model slowly seemed like it started to change. And that was because Celsius grew so fast. So many people were interested in this. And this is where it's, and I've looked back at many of the videos and many of the AMAs from people that have been sending them to me. It appeared that many people were investing into what we considered a bit misleading, which is a savings account that was pitched as safer than a bank. So I've looked back at some of those videos now. I wasn't following along with all of this the way that this was marketed. And then there was lots of affiliate schemes as well when you received tokens. And then it seemed like the guarantees were being made in terms of the safety of the business based upon a balance sheet that had lots of tokens, and those tokens are volatile. It appeared that then other people come along, and it seemed like retail were over collateralized, and then there was deals with hedge funds where they were under collateralized. And so the risk profile seemed to change very significantly. And so from our perspective, and then we started to hear that there were 6 different ways of generating yield. That's a deviation from the peer-to-peer model. If there's 6 different ways of generating yield, you now seem to be investing in the ability for a fund manager to invest those funds effectively, which would then move you into what we do at BnkToTheFuture, which is securities laws. And securities are marketed very differently. There's lots of restrictions on how they're marketed. You have to have lots of transparency, lots of disclosure, suitability testing, and the things that really stop people putting their life savings and understanding that they should only put a percentage of money they can afford to lose, and they have the information to know what they're investing in. This is what, as more recently, as I started to dig into these things, that seemed to be more and more people were contacting me, and they put their entire life savings. They were taking money out of a bank thinking that they were investing into a low risk savings account rather than a high risk security. And then it turns out that the collateral behind that started to change as well. There was lots of tokens, and then there was algorithmic stable coins, things that are at a significantly higher risk profile than the original dollar-backed stable coins or Bitcoin, or going a little bit further down the risk curve with things like Ethereum and stuff like that. And so it looked like this model was getting riskier and riskier and riskier. And so at this stage, we started, there was an announcement that Celsius was doing their Series B. We were meant to be invited to that funding round as an existing shareholder, but we saw the press release. So we contacted the Celsius team saying, we got preemption rights. We need to, we need to make sure that this is available to existing investors. And so we started to enter into an agreement, a settlement agreement around that oversight. And we started to conduct due diligence. And this process went on for months. And we never quite got the disclosures that we were asked for. We also gave them a deadline to provide the documentation. We told them that there were some regulatory changes that were coming up. And suddenly on an AMA, we got a massive amount of tweets from people that were saying, we've got regulatory issues at BnkToTheFuture. We're like, what the hell's going on here? And Alex threw us under the bus. And because the due diligence hadn't been provided, seemed to put it on our fault. So I went live. You can go back to these broadcasts. And very diplomatically, because I'd made friends with lots of people at the Celsius team and they were apologizing for this. I tried to make it sound in the best way we could, to present it in the best way. But we started to realize that there's a bit of a short gun here. There's somebody that seems to be firing off the line. And so we requested more information. It got closer and closer, and it just went on for months and months and months. But we weren't quite getting all the information that we wanted in order to make this assessment, begin the Series B. And then the round was announced as closed, but we hadn't completed our part. So we started to ask further about the financials, the regulatory, and then we were finding out that there were regulatory challenges. Now, part of our group, as we do things via a US broker-dealer, we have to disclose things to FINRA, and we have to go through the process that we have to go through. So we started to go deeper and deeper, and at some stage, it brings us to where we are. We kept saying we're ready to go live as soon as the DD is complete. Alex kept announcing it. And we were just waiting for those documents to be presented to us. We continued to build and beta test the securities law compliant version that we built. And then that hits us to the stage where we are right now. When we realized that the collateral was actually a couple of things that were, and it was going further and further. Why? Because this company grew fast. They went from Alex saying that there were like 900 people, where before he was saying there was 50 people. It kept growing and growing and growing. And lots of people were demanding more and more yield. In order to generate that yield, they must have been trying to chase their tail and find as many places to generate that yield. And I think that this is when we started to see some of the complications that happened as it went public. And so the first one was obviously the Luna situation, and a central banker that put a tag on his decentralized coin, claiming that you have these algorithmic decentralized DeFi stable coins. Turns out that it was all collateralized by a token that is deeply speculative and doesn't necessarily have the liquidity. It was announced that billions of dollars of Bitcoin was going to be backing it. I started coming out saying that we're due a correction, get ready for a 70% correction. And it turned out that these models were not stress tested for that. Celsius, it turns out, had some exposure to that. Not aware of the full details, asked for those details. Some power plays happened. And it looked like there were several companies that were exposed to that position. Celsius allegedly came out and said that they weren't exposed, so they pulled out the money to protect. Prior to that, there were announcements of certain hacks, certain situations, and it looked like it was moving from a high-risk security to there potentially being some holes as more of these announcements were announced. So we kept asking for information on those things. Then the systemic risk event happens. It turns out that there seemed to be some uncollateralized loans from many of the lending platforms exposed to one particular hedge fund that was exposed to this token and this stable coin that got completely wiped out. And so this is when we realized how interconnected the entire market had become, because really this yield was all being generated from what looked like unsecured loans from some major counterparties. And it started to have a cascading effect across the industry where they needed to sell that $3 billion of Bitcoin. It turned out that when you're using Bitcoin as collateral, that can create a crash in the Bitcoin market, which is okay because I hold a long-term belief, and when Bitcoin crashes, I think that's a great opportunity to dollar cost average in and believe in the long-term future. I separate my spending money from my investment money, as I've always taught. So therefore, I don't really care about that. But it started to show that there is some kind of interconnected situation. And as more and more of it started to unwind, it started to look like there was a lot of mistruths around, things that might be perceived as true, like we got $2 billion, $750 million funding round, and maybe a lot of that was sell tokens, which crashed as this started to go through. The moral of the story is that it turns out that if you had invested in a DeFi fund, then fair enough. You were taking those risks. You would have been disclosed. There would have been documentation to help you understand the risks. You would have had to do suitability tests and everything you have to do when it is a security. Then people did not understand the risks of some of these things, and people were taking their life savings because they were told that this is as good as a savings account. So this is when I realized, after I was being sent lots and lots of message, I actually couldn't be just in mourning. I needed to find out what was happening here. My team were contacting me and asking me what we need to do. It turns out, obviously, that a stable coin that is not backed by dollars or cash equivalent, like Tether, means that if it depegs, you can't get those dollars out, obviously. So that is a different level of collateral, lesson one. Lesson two, that if you are having collateral based upon illiquid, highly speculative tokens, you can have complete wipeout because the liquidity does not exist that is backing up those loans. And therefore, there's a huge risk that needs to be factored in as you go further and further and further down the risk curve. That seems like everyone was trying to go further and further down the risk curve, because the further down the risk curve, everyone was promising, higher yields based upon tokens. This was all layering on top of each other and really creating what looked like a very systemically risky event as this unfolds. And that brings us to really this Lehman Brothers of Bitcoin moment. So immediately, I'm used to disaster recovery. In the past, I was a shareholder in Kraken when they were involved in the disaster recovery plan later for Mt. Gox. That was the biggest disaster in the industry. And we were involved in structuring a free market solution that allowed Bitfinex to start a recovery plan within 2 weeks that was all resolved within a very quick period of time. So I wanted to immediately give that plan to the Celsius team. So I contacted Alex. I told him about the plan. I told him how it worked. And I warned him, you have to be really quick, really decisive, communicate effectively. Because if you don't communicate effectively and you don't act decisively, then you end up with all sorts of rumors and all sorts of FUD and all sorts of concerns. That can cascade into a disaster. So he immediately just put me off to Citibank. And I knew that at that stage, I started to get concerned because I knew that traditional finance wouldn't move at the pace that is required in order to make this effective. So instead, we offered that we could support them in putting together a structure. I don't want to go over it right now because I've covered it many times on other videos, but look up Bitfinex hack recovery. You can see a video where we explained how we did it for Bitfinex. And the effective communication there's two things that really made it work: effective communication and complete transparency of the financial situation. This is when we started to realize that this was going longer, because we started to see BlockFi, who put together a recovery plan, because they transparently disclosed the financial position to investors that had the level of sophistication and the backing and resources in order to put together that recovery plan. We then started to see some of the other companies, some of the hedge funds just blew up for no recovery. And we started to see companies that would disclose their financial position, move into Chapter 11, and then once you have the financial information, you can then put together an effective recovery plan where you can convert either some of that debt to equity, or you could do something like a bit more innovative where you launch either a stablecoin or a security token. And we've had many experiences with different structures that would make that work in order to ensure that you can protect the brand of the company, recover from that. But you have to fess up, you have to put your hands up, and you have to disclose the financial position, communicate it effectively, and then put together a decisive plan. As we saw that this wasn't happening, we started to get deeper and deeper concerns. So at that stage, I took to Twitter, and you can go back through the Twitter archives, and started to let people know that there is effective recovery plans, and there are things that can be done. And the worst situation is if we as an industry allow this to get into what happened to Mt. Gox in the early days. We had to all lobby in order to ensure that the Bitcoin wasn't sold as a result of that disaster and it wasn't put into bankruptcy. Unfortunately, all of the lobbying effort meant that they kept that Bitcoin, they gave it a chance, and it came out of bankruptcy because that Bitcoin was worth a lot. Now, the challenge was there were lawsuits absolutely everywhere, and it went on for years and years and years because those lawsuits, and it wasn't done under Chapter 11, it was done under Japanese law. There are other jurisdictions. So Celsius is a UK company with a US subsidiary. UK bankruptcy law would be very unfavorable. And then I started to realize that this is systemically risky. If we do not solve this, then traditional finance will just put in, mass liquidations. It could even move to something like Chapter 7, and then everyone would get the worst result as well. So we put together the Depositors First campaign, letting people know that wherever this goes, we're going to put together effective plans. We was moving at 1,000 miles per hour. And we followed the strategies. We told them that we don't believe there's a future for this company unless depositors get a good result. If depositors get a good result, there could be a future for Celsius shares. And if there's a future for Celsius shares, then they may be able to restructure the token to comply and restructure the company to comply, given that we believe that this was going to be a securities business, or it may have even come into a lending or banking business based upon the risks and some of the over-collateralized and collateralized models. Just don't want to get too much into the nuances. Okay, so that brings us to where we are today. Unfortunately, those finances were not provided. So we put together a big syndicate of investors that had very deep pockets, including myself, willing to put some more skin in the game, which then allowed other people to be willing to put a lot more skin in the game as well. But it required disclosure of the financials, and that disclosure was not being done. And then we started to see moves in order to obfuscate some of the financials by trying to say, here's a mining business, here's a custody business, and the rest of it we're not saying. And this is when people started to message me more and more, and I started to get a bit more aggressive because I started to believe that actually the existing board and the existing management, if they continue down this path, are never going to be able to operate a regulated business. I know what those applications are like in order to get those licenses. The boards need to have a squeaky clean profile. You have to tick all the things. Have you been involved in bankruptcy? Have you been involved in enforcement action? Have you broken securities laws? Have you done these things? Have you done that? And as soon as you tick yes to any of those things, it takes years, and you're in a mountain of documentation, fit and proper tests, and trying to do. So I started to realize there was not going to be a fast way of getting this business regulated. So I started to speak to other people that had the licenses, other businesses that were working quietly in the background to secure those licenses, and put together a plan, last resort, that it looks like the actions that Celsius are taking right now is that the trust in the brand's going to go, lawsuits are going to come flying through. And it looks like there is some very challenging times ahead for the board members based upon the actions that they were taking. And then everybody, as I said, when you don't get this effectively, everyone starts digging into the blockchain, and then they find certain misleading things, and tokens were sold and dumped onto people, and millions, and all this stuff started to happen. And then you just started to see the destruction of a brand, the destruction of trust, and then more and more red flags started to come through. So at that stage, I realized that we had switched to another effective plan. So we put together an effective plan. We had the backers, we had the strategy, and we had the restructuring plan. At that stage, we realized we believe that this brand cannot recover, and these board members cannot recover. I was invited at this stage to join the board. And at that stage, I started to question the ethics and integrity, started to get a bit more vocal, because I'm a director of a regulated company. That would destroy my business if I was caught up in something like this. And the NDAs that were being asked to solve, I believe, was just ways of obfuscating. And then restructuring was happening that started to deeply concern me. So I started to realize that in order to maintain my depositors first promise, that I needed to do something that is very against my nature. I'm not a very confrontational person. I built for over a decade relationships with multiple competing companies because I have managed those relationships effectively. And I always try and put together effective solutions. And you can ask any of those people in the industry that have me as a shareholder. It's not my nature. But I started to realize that we were in a choice right now between protecting a board member from unearthing actions that I believe could lead to really, really serious consequences versus depositors. And so at that stage, everyone started having different interests. We had people that own tokens. They were trying to short the tokens, asked me to short the tokens. And I was just disclosing everything, saying, I'm not going to touch any tokens. I'm not going to move any funds. This will go to discovery. There's going to be all sorts of stuff. And every single thing is going to be unearthed in this, the way that this is going and the direction this is going. I've got to stay true to my ethics. I've got to stay true to my integrity. If I was seen to start moving funds out, or I was seen to start trading tokens, or speaking to people that were creating articles and engaging in this. And so I just literally went into a frenzy of disclosure, but here's what we need to do. Disclosure, but here's what we need to do. Started to get my reputation attacked. More and more people were following me. And so suddenly I just found myself in this situation. I wasn't sleeping. I was on call after call after call. I spoke to everybody in the industry. I was putting together effective plans, and I knew where this was going. We had to be 10,000 steps ahead, because the way that this was going is it was the only way to get the finances was this was going to be moved into Chapter 11. And I wanted to be prepared for not having the worst case scenario. The worst case scenario is that it moves into Chapter 11, they get conservative, they sell all your crypto, restructuring doesn't happen because there is no future for the company, it's not compliant, it doesn't have the licenses, and it cascades and gets worse and worse and worse. So at that stage, I had to move, to the final stage, which is the only way is to put together an effective recovery plan for depositors. And they will, equity holders, the only way that they have a future is if there is a new brand, new licenses, new regulations, and a very fast future in order to come out, because you can't restructure and use equity to restructure when the equity is worthless. And then you moved into forced liquidations and all of the disaster. And guess what? That would then cascade all of the issues. Celsius behind the scenes were trying to get to the point where they knew their financial position. Obviously, everyone talks about blockchains, but I also know that there's contracts that happen, market manipulation that happen, obfuscation of tracks, and all sorts of things that I knew this was going to get messier and messier and messier. And therefore, a new entity was going to need to be created. So I started putting together all my contacts, putting together the funding, and getting ready for the worst case scenario, which led to deeper and deeper attacks. So that really brings us to the moment that we are in right now. I started getting very, very criticized for creating FUD and stuff, because I was trying to warn people from my experience of being involved in the industry for over a decade and getting steps and steps ahead. And I knew that community effort and community lobbying was going to be needed in order to get this. And I was also knew that deep pockets were going to be needed in order to win back trust. And then I also knew that, sorry, my wife's coming in. What's up? 6 o'clock. All right. Okay. So, Jesus. All right. So I'm going to start a Twitter space. Jesus, I am so bad at over talking. I'm going to decide for the emergency broadcast to do the other things in another emergency broadcast, because I did want to bring this all around back right now. But the end result of all of this is I just want to know, and we'll move over to Twitter Spaces, so that those that want to ask questions, we can start to ask a question, can ask those questions, and I can have more of an interactive session, more productive. But I do believe that there is a really, really interesting future that I am under NDAs with lots of different players, trying to make sure that once we have depositors, there needs to be a way, and this is where we lead to the bail-in conversation, that normally during these restructures, debts get replaced with equity if you don't do a government bailout or something like that. The Lehman situation, Lehman's went down because it didn't have a government bailout and it was too complicated to do a bail-in. But certain parts of the business were restructured, the assets went down, it created a cascading effect. I wanted to avoid that in this market, because I knew that people were making bets that the market wouldn't go down further, and that would create more cascading liquidations. And the worst case scenario for everyone's where they only end up with a tiny amount of deposit left, no future of equity, and a token that is at best an illegal security, that everyone was, some people were taking all of their returns in that token, and that token would get delisted from all exchanges, and that would wipe out many people that had all of their funds in Cell. That is exactly what I've been trying to avoid. So I started putting together AMAs with legal professionals to help people that couldn't afford legal advice understand some of the things that they needed to do. Started to go on a roadshow to share some of that, and just take what I thought was the most decisive action. So that brings me down to the situation that we are going to take some of your questions in the space right now. I want you to know that I've seen these cycles 3 times. And there are big winners at the end of every cycle. In the first cycle after Mt. Gox, Kraken, and some of the stablecoin providers were the big winners. After the second cycle, Binance was the big winner. And after the third, this cycle, FTX is looking to be the big winner. But through effective bail-ins, restructuring, and using Chapter 11 by planning several steps ahead, we could have big winner that essentially puts together many of these distressed lenders, combines it with many of the licenses that are out there, and allows for a effective model that can put depositors first, have a company that can get back up, restructure, and have essentially the next wave of securities, Bitcoin investment banking, with many of the partners, with many of the funding, much of the balance sheet. And so I'm very focused on that right now and putting together a very effective what I believe to be a good future. And rather than just have one company that comes along and benefits from that, why not have all of the people that have suffered the severe financial anxiety from that, just like they did in the Bitfinex situation, where they had, the opportunity of big upside. I'm not saying that can happen. These things are risky. We disclose all those risks, and we'll make sure that people understand the risks in that. And we will be, and the reason that at some stage I'm going to need to go under NDA is because I believe we need to use this moment in the crypto market to structure something very special from all of the lessons that have been learned, and put together an effective proposal that prevents those that are going to be making decisions once the finances are disclosed, because at the moment the finances for Celsius just won't be disclosed. Once they are disclosed, an effective plan can be put together with 1,000 steps ahead that. And I want everybody to know that there is a very interesting future. We were applying for investment banking licenses. We have people that have been working for 6 years on the lending licenses. We've been working for over a decade on the securities licenses. We were working with countries. In February, I was in El Salvador applying for the retail licenses in order to be able to make these products available on a more global scale. And I think that there is, we were actually working on securities law compliant version of the lending service at that stage with Celsius as a partner. And we were even working with the next waves of governments that are making Bitcoin legal tender to put together collateralized models where it could be backed by credit ratings of countries in order to put up some of their Bitcoin that they were accumulating on their balance sheet. So I just wanted to let people know that depositors first. And then, because I believe that the funds, there is a hole to be made up for, there needs to be liquidity and balance sheet in order to put together a restructuring and an upside business that I believe everybody that has suffered the financial anxiety and has suffered from many of the misleading and lack of faith in the industry, that there is a future, because I do believe that these are cyclical and we enter into the next wave. And that's what I wanted to leave on a positive side. I was going to actually go through some of the other things on some of those trends, but I'm going to leave that for another emergency broadcast, because always remember, you are alive at one of the most interesting and exciting times in financial history. Some are going to get really hurt, others are going to do incredibly well, and I want to make sure that you're on the right side of that change. So just before we move over to the Twitter space, which has been organized, anyone that comes on that space, you're welcome to listen in, but we're going to be inviting people, and here's our requirement. We only want people that have vested interest in the situation. So if you're a Celsius token holder, a Celsius shareholder, or a Celsius, someone that has a balance on Celsius that's locked up right now, then you're welcome to come in, ask your questions, make them as tough as you want. I'll answer those. We're in this together, so that I can share some of those. And I just wanted to really spread a little bit of the positive love that in all these disaster situations, this really brings back to, my relationship with my father, that in all these disaster situations, I found Bitcoin at $3 because my father asked me that question. And so those people that are in a situation right now where they can't even disclose to their partners or their fathers that they are scared that the life savings of those people have been put into stable coins. We are working, and I will work as hard as I can until my voice doesn't work anymore and I'm coughing like crazy day and night, and also put together law panels and all sorts of stuff. So follow me on Twitter. I'll do more of these live broadcasts. I'll go on other people's channel. We put together a web page, BnkToTheFuture.com/Celsius, so we can have our team view your proposals. And I'm going to move over to that Twitter space right now, start that, so we can start engaging in your questions and have a conversation and address some of those. So Azad, just before we do that, could you just pull up the Twitter space so they can see it on the screen share? It's my Twitter at Simon Dixon Twit. Maybe it's already started. Maybe Azad's. Oh, there we go. So head over to my Twitter. I'm going to start that very shortly. I'm just going to get some water, take a quick break. Then we'll get started. We'll engage in a conversation. And apologies for blabbering on as usual, but I just want to give you the information. Very proactive here, and see you on the other side. I'll see you over on Twitter.
Just a quick one as well for those of you who want to know how to access Twitter Space. You can't do it on desktop; it's only mobile.
Okay, awesome. So I'm going to move over to my mobile. Thanks, everybody. I'll see you over in Twitter. We're in this together, and solutions are available. I want to be proactive. It's been an emotional roller coaster, an emotional journey, sleep deprived, emotionally drained, but I'll keep fighting. And I've got the best team that money can buy working on this day and night in order to try and get the best result of this situation. Peace, everybody. Let's do it with peace, love, unity.